and welcome back to Demystified. Let's begin a new series on basics of stock markets. It might be an overwhelming topic for some, but don't worry. As usual, we will simplify it as much as possible. So buckle up, make sure you have subscribed to Demystified, and let's begin. A stock market is essentially a giant marketplace where people can buy and sell shares of ownership in companies. These shares, also known as equities, represent a tiny piece of ownership in a company. The stock market is a bustling hub of financial activity, plays a pivotal role in the country's economic growth. It provides a platform for companies to raise capital for expansion while offering individuals the chance to invest their savings and potentially building wealth. Understanding the intricacies of this market, however, can be overwhelming for beginners. This comprehensive guide delves into the basics of the Indian stock market, equipping you with the knowledge needed to navigate this dynamic landscape. Let's discuss the players and their roles. First is the companies. At the heart of the market are the publicly listed companies. They issue shares, which are the units of ownership through an IPO or initial public offering to raise capital for growth. The IPO process involves stringent financial disclosures and regulatory approvals. Listed companies are obligated to maintain transparency by regularly publishing financial statements and updates on their performance. Next come the investors, the lifeblood of the market. Investors can be individuals or institutions. They purchase company shares with the hope that their value will appreciate over time. Investors can be categorized as short-term traders. Now they aim to profit from short-term price fluctuations through frequent buying and selling. This strategy requires significant market knowledge and can be risky. Long-term investors, they focus on companies with strong fundamentals and growth potential. Their goal is to hold shares for a longer period, potentially benefiting from both capital appreciation and dividend payouts. Next are the brokers. Acting as intermediaries, brokers connect investors to the stock exchange. Investors place buy and sell orders through brokers, who then execute these orders on exchange platform. Brokers offer valuable services like market research, analysis, and guidance on investment strategies. Next are the depository participants or DPs. These are SEBI-registered institutions responsible for holding investors' shares electronically in a Demat account. This eliminates the need for physical share certificates, making the process faster and safer. DPs provide investors with account statements and facilitate online transactions. Securities and Exchange Board of India, SEBI. As the regulatory body, SEBI plays a critical role in maintaining fair and transparent practices in the market. SEBI regulates the activities of stock exchanges, brokers, and listed companies to protect investors' interests. It enforces regulations, investigates market misconducts, and promotes investor education. India boasts two primary stock exchanges, the Bombay Stock Exchange or BSE It was established in 1875. It is the oldest stock exchange in Asia. The BSE Sensex, a benchmark index, tracks the performance of the 30 largest and most actively traded companies listed on the exchange. And the National Stock Exchange of India, or NSE, founded in 1992. It's the leading stock exchange in India by trading volume. The NSE Nifty 50 is the benchmark index of the NSE, tracking the performance of the top 50 companies. Now let's understand the trading mechanism. First comes the order placement. Investors through their brokers place orders on the exchange to buy or sell shares at a specific price. These orders can be market orders, instructions to buy or sell shares at the best available price in the market, prioritizing immediate execution, or limit orders, instructions to buy or sell shares at a predetermined price or better. This allows investors to have more control over the execution price. Matching engine. The exchange's sophisticated electronic system plays a crucial role. It matches buy and sell orders based on price and time priority. A trade is executed when a buyer's offer price matches a seller's asking price. The settlement process. Trades are settled on a T+1 basis in India. This means the delivery of shares and payment occur within 1 working day after the trade date. SEBI registered clearing corporations handle the settlement process, ensuring smooth and secure transactions. Now, the benefits of participating in the Indian stock market. Number 1, mobilization of capital. Companies gain access to a vast pool of funds from investors, fueling their growth and contributing to economic development. This enables them to invest in research and development, expand operations, and create jobs. Number 2, investment opportunities. The stock market offers individuals the opportunity to invest their savings and potentially achieve higher returns than traditional savings accounts. Over the long term, stock market investments have the potential to outpace inflation and grow wealth. Number 3, price discovery. Through buy and sell orders, the market establishes a fair market value for each stock based on supply and demand. The price transparency helps investors make informed decisions based on a company's financial performance and future prospects. Next is market efficiency. By facilitating the allocation of capital to companies with strong growth prospects, the stock market promotes economic efficiency. Resources are directed towards companies that are likely to generate positive returns, contributing to overall economic growth. Now some important considerations. Volatility. Stock prices fluctuate constantly and losses are as possible as gains. Careful research, understanding of risk tolerance, and a long-term investment approach are crucial. Regulations. SEBI regulations are in place to safeguard investors, but it's essential to be aware of your rights and responsibilities as an investor. Trading costs, brokerage fees, trading charges, and other associated costs need to be factored in before investing. Investment strategy. Develop an investment strategy aligned with your financial goals and risk tolerance. There are various investment options available, such as mutual funds or exchange traded funds or ETFs, which can be helpful for beginners. Stock exchanges in India act as a vital bridge between companies seeking capital and investors looking for opportunities. Understanding the basics of how these exchanges operate empowers you to navigate the Indian stock market with greater confidence. Remember, thorough research, a well-defined strategy, and a disciplined approach is key to success in this dynamic and ever-evolving financial landscape. So this was a brief beginner's guide to stock markets. I hope you were able to follow through. Do let me know in the comments below. Thank you for watching, and I will see you in the next video with more insights from the world of finance. Till then, happy investing.